Welcome, everyone, to our meeting on real world results of the ARM processor, the Fujitsu ARM processor, primarily in oil gas. What I'd like to do is take just a few minutes and give you a HPC market update and focusing in on the oil gas sector as far as how large it is, how it's growing, and some of the main issues facing a lot of the buyers in the oil gas sector. For those of you who don't know Hyperion Research, here's our website. Also, where I've circled in red, that's where we make available for the community a lot of examples of the research we're doing, the return on investment analysis, different reports, forecasts, and so on. So we welcome you to download those files. Just as a quick overview of the HPC on-premises market, last year the market was 13.7 billion in purchases of servers. Now we were expecting the market to be down quite a bit because of COVID, literally down like 7-8%. But there was one large system sold in Japan, the Fugaku machine, that was over $1 billion. And because of that $1 billion sale, 2020 was roughly flat, up 1% compared to 2019. And these are the main categories, as you probably know, that we split it into supercomputers, divisional, departmental, and work group. Now, in this chart, we always talk about how the HPC on-premises market is very fluctuating. We call it the roller coaster effect. And this is one example showing the growth or decline quarter by quarter for the last few years. And you can see that with COVID, we went from some really nice growth, quarters to then, serious declines. The lowest one there at almost a 20% decline, 18.5. And the last two quarters have seen tremendous growth. So we're trying to figure out how this year's going to turn out, but it's a real challenge to actually forecast it, because will the last two quarters be similar high growth, or are they going to go back down lower because of supply chain issues or other issues? So we're still spending a lot of time, and we're actually updating our forecast now every quarter, just because of all the uncertainties. And this view of our data, and if anyone wants more data, I'm showing individual snapshots out of large data sets. We track all these parameters, by 5 regions, 28 countries, and everything goes back 30 years. In every category, we have to maintain 5-year forecasts. But these are the larger verticals that we track: the bio, life science, manufacturing, and you can see geosciences and oil gas is about in the middle there. So last year, around $865 million was spent on on-premise servers for the geosciences. From a vendor viewpoint, HPE is the number one vendor in the market, with Dell being very strong. And then you can see the rest of the vendors are fairly smaller, meaning, less than 10%, with Fujitsu having an extremely strong year because of the Fugaku system. So this is, again, taking kind of a broader view of what's going on in the overall market as far as HPC. This is a 20-year view that shows that roller coaster effect. Now, the good news is there's an underlying growth trend somewhere in the 7, maybe 8% range. But you can see that it goes through periods of, 3 to 5 years of growth, and then a year or two of decline or flatness. And we're just at the end period of 4 flat years, so relatively small growth, expecting this coming year to be flat also. But then we expect to see quite a spike, heavily driven by the exascale systems that are going to be coming on board more strongly in 2022. Now, in addition to the on-premise server market, we look at the storage, the add-on storage, middleware, application services, and this is just the repair services. When you add all those other elements together, it roughly doubles the size of the spending in the market. And so in 2019, it was around 27.4 billion, 2020, 27.7. So roughly flat, but again, thanks to Recon, we did not see a decline in the market from COVID, which was just phenomenal to see that. Now, this chart doesn't include the cloud spending, which we'll show later, because that when you add cloud spending to this table, it shows the total spending by end users for doing HPC workloads. So with that, I would like to dive into just the HPC and the oil gas sector. So again, this is some historic looking charts and the forecast. So this is kind of showing a longer term trend. And this first one I'm showing here is the historic version. And you can see there was very steady growth and sizable growth in, from 2016 to 2018. And then 2019, it was kind of flat. And then COVID did start, hit the oil gas sector in 2020, but not dramatically. I mean, for something as powerful as COVID was to the economy, this was a surprisingly robust result. Now, looking forward, we're expecting to see steady growth in the oil gas sector. We are right now in our forecast expecting 2025 to be another flat year. Because we're expecting to see this robust growth for 3 to 4 years, and then going back to flatness. But that flatness is an extreme high point compared to history, which I just showed. So it's still very high in 2025. Now, this is divided by the different parts of the world. Our primary higher level regions are North America, EMEA, Japan, Asia Pacific without Japan, and then rest of the world. And you can see that EMEA and North America purchases the most on-premise HPC systems. And again, you can see that roller coaster effect as far as history. And then looking forward again, we're expecting to see strong growth, as I mentioned before. But again, EMEA and North America are really the ones that are driving most of the purchases. And then we're seeing lots of changes in the oil gas industry as far as what buyers are purchasing or users are using. The system sizes fundamentally are growing. The problem sizes are growing dramatically, much like the rest of the industry. But in oil gas, whether it's seismic or reservoir, the problem sizes continue to grow. But the type of hardware and software and approaches, architectures just vary across the whole sector. Whether you use a lot of GPUs or primarily CPUs, whether you're incorporating public clouds completely or just in a larger way, and then using new software applications and new ISV codes that can actually solve with new methodologies better science and more advanced science. And then also applying new technology. So some sites in the oil gas sector tend to buy existing, I called it commodity, but just existing proven technologies. Other sites like to buy the latest and greatest new technologies, whether it's in the processors, memory, interconnects, and so on. And also the success with these new technologies are varying quite greatly. You would think that the oil gas sector would be common enough that the successes would be very similar, but we actually see quite a variation in that. Uh, in this chart right here, I mentioned we have this whole return on investment work that we do, and we thank the Department of Energy, U.S. Department of Energy, for funding this research. In this particular slide, I'm showing it just for the oil gas sector. So and again, this is macroeconomic modeling. What we do is we look at a front-end investment or input, which is the use of an HPC system to solve a specific problem, and the output is either revenue, profits, cost savings, or also we have a whole side on innovation, scientific discovery. But if I look at just the financial side for oil, gas, and of that, in the database, we have 763 projects across all sectors. But in oil, gas, the average return on investment for each dollar that a company purchases in HPC servers, they're seeing $416 for revenue and on average $54 in profits. So these are just phenomenal returns on that. And in fact, if you look into the data structure of the 763, there's a number of oil gas companies that are returning so much, they're actually outliers in the whole data structure. And we welcome anyone, and we make this entirely available to everyone, the whole data structure. So if you don't like the way we do our math or the calculations or our economic analysis, we're actually supplying the raw data because we do all the data collection for the whole community to do its own analysis. And so with that, I would like to talk about some interesting key findings that affect the oil gas sector, plus many other parts of the industry. First of all, AI is growing everywhere. Machine learning, deep learning, and that. In the latest survey that we're just finishing the reports on, 92%, 92.8% of all HPC sites are using AI somewhere. Now, a lot of cases, these are small experiments and things like that. So the actual AI type jobs only make up about 19%, but still 19% is a large amount. In many cases, though, this is data preparation is one area, post data processing. And then the third large area is actually incorporating AI in the traditional modeling and simulation applications. They also run typically on the same system they have today, 68%. Going in the future, though, we expect more people to buy some dedicated AI systems, but at the same time, we think the dedicated AI systems may just be special configured nodes within a larger cluster. So just amazing. And then is the use of clouds for running AI and big data workloads also is changing dramatically. Last year, it was around 56% ran something in the cloud for doing AI HPDA. And right now, their expectation is going to about 75% in the next 18 months. Again, this is a lot of these are experiments still. So I always want to be careful that this isn't, uplifting your whole workload or anything like that. But one thing about AI and big data is, of course, you need a lot of data in the structure. And often that data is already in the cloud. If it has to be moved around a lot and it's being moved around in a cloud, then it makes sense to do some of the processing where the data is. So here's our updated AI forecast. Sorry that the numbers here are a little small to see, but everyone can get a hold of the charts and the slides I'm using. But we're expecting the first row there in table 1, that's the on-premise server market, to grow around 6.8%. Then if you look at what we call HPDA, so that's big data, AI, and data analytics and analysis, we expect that to grow a little more than twice as fast, around 15.7%. And then all the AI based parts, whether it's machine learning, deep learning, and others, is going to grow around 30% or higher. And if you think back a couple years ago, there was a lot of hope or thought that deep learning would be the leader in the market. And what we found is really machine learning is what's being done right now. A lot of that is because of the transparency issue. If you don't know how the computer made the decision and did the calculation, there's just a host of issues that happen there. So we saw happen over the last 3 years was machine learning really is the primary technology, but deep learning is growing faster. And we expect deep learning to actually be the primary one at some point in time, but not within the next 4 years. Then the use of coprocessors and GPUs. Tremendous use of GPUs right now across the whole HPC sector, as far as at least having one GPU in your system. But when you look at the total number of GPUs that are installed in each system, it's relatively smaller. So what we see the trend here is that GPUs have truly gotten to the point where they're in the, I don't want to call maturity, but they're literally installed everywhere people are doing things. A lot of sites still haven't changed their software, been able to figure out how to use them fully, but they at least have found different places for them right now. And we rarely forecast something to grow at a high rate. Our forecasts are usually somewhat conservative. We try to do it bottoms up by, talking to thousands and thousands of people. Um, but in the GPU area, what we found is that it's going to likely grow at a rate of at least 30 to 40%. And it's going to just be a hockey stick over the next 4 years because of all the exascale systems. Next, I want to talk about some software trends. All the operating system preferences right now, Red Hat Linux is top of the list right now as far as in the number of sites that we track. But you see a number of other ones like CentOS are also popular. Parallel programming languages, have been around a long time. People have been using them. But the interesting thing we're seeing now is there's an average of 6 different language or parallel programming models per site. So the number of different ones and the varieties has grown tremendously. And then the other big thing is, as I mentioned earlier, there's an increasing runtime for the top applications. 40% of the respondents said that their number one application right now runs for more than 24 hours. And this is the first time that we've seen that large number of sites that actually have an important major application they use a lot that runs for more than a day. So, growing in size and complexity both. So in summary, some conclusions here. The pandemic was expected, as I said earlier, to impact 2020 by quite a bit of a decline, but thanks to Fugaku, it was a growth year. We're still very nervous because COVID, supply chain, everything else, that 2021 may be a flat year, but we are fairly confident in 2022 to 2024, heavily driven by the exascales, heavily driven by AI, HPD, and big data, will be very strong growth years, is our expectation. We're also very excited because there's so many new technologies are showing up all over the place, whether it's in the processors, the memory, the interconnect, storage, and then the software side. And because of AI and big data and machine learning, deep learning, we actually think a lot of applications are going to be going through a major redesign and rewrite over the next few years. A lot of people have held back on doing that because it's so costly, and in the case where you have to verify the results and everything else can be very costly. But we think the advantages of all the new technologies are going to drive it in that direction. The use of cloud to run HPC workloads has become a viable option for many sites. And then we also think storage is going to even grow faster than our current forecast, again, driven by AI and big data. And with that, I invite any questions and welcome you to joining us today on the webinar.